Good morning from Chicago traders. It's 8:03 a.m. Chicago time on Thursday, the 8th of April, 2021. Thanks for joining me on episode number 1968. Derivatives trading involves substantial risk of losses, not suitable for all investors. Past performance is not necessarily indicative of future results. Let's hop right in and look at our overall posture given the extended trading hours across the globe. The posture is risk on currently. The market is pushing higher, has pushed higher. The S&Ps at new all-time highs. Not so for the Russell, the Dow, or the Nasdaq, but the big dog, the S&P, keeps pushing highs as it barrels its way to 4,100 after essentially melting through 4,000 below. And that's where we stand this morning. Yesterday's action in the afternoon was driven by the meeting minutes, which showed a commitment to keeping interest rates low for the foreseeable future. This is what came out of the FOMC minutes release at 2 p.m. Eastern. Today we have Fed's Chair Powell at 12. We have the inflation rate out of China at 9:30 Eastern. In any case, we're seeing allocations. Where is it? We're seeing allocations to the metals. Silver is taking the lead today, up 1.22%, up 33 and a half cents, trading at 25.58. The Nasdaq is up 109 points, 0.8%. The yen is strong today. Gold is up in the mid 1700s, 1752 and 30 cents, up $10.70 or 0.61. The S&P up 11 and a half points. The S&P gapping up this morning, as is the NQ. Again, not so for the Russell or the Dow. The laggard today is crude oil. Crude oil is off 43 cents, trading at 59.34, down 0.72%. Hopefully you're hearing me nice and clear this morning. That's what we have for today. We've traded 157,000 contracts overnight in the S&P, on the lighter side of normal, but well within the norm. 92% long is the overnight inventory, and we've moved from 40.7250 to 40.9275, 20 and a quarter points in what is a completely balanced profile. We'll go over it in a minute, but the profile has the current action shows that the overnight point of control is on top of the full session mid and on top of the full session VWAP. The market has found an extreme in the 92.75 and is settling in the middle. So this sets us up for an interesting open, especially since we have a gap up. Also, we have some decent structure, really nice setup yesterday, an inside out trade breakout. I'll go over that in a minute. I'm going to do my best not to go way over my time and make this an epically long adventure for you. Here's what was expected yesterday. This is from yesterday's video. The primary expectation is we were opening below that 63.65 zone, and that was really key for me. The 63 to 65 zone, we were opening underneath it. The expectation is we're likely to see relatively significant resistance there, and then I expected it to fail down below the prior day's low of 58 and a quarter right there, and then to push through the overnight low 56.50 to target 51.50, and then potentially to bounce around in there. If it continues, then 38 becomes the key. The way it was configured coming into yesterday was for weakness. That did not happen at all. In fact, it melted right up through 63 to 65, right on the open. We had another one of these open drive-ish kind of behaviors yesterday. Um, and let me show you that in our review segment. How do you like them graphics? um, no camera today. I'm starting from home. Um, so we open up. We open up at 63.25. So we've seen this several times. We open up at 63.25, and then we move 2 ticks down before we launch away. And you can see that it just busted right through the 63 to 65 area. This is the box that I was watching. And so it's longs only from this point. The market has clearly refuted an area that was anticipated to provide resistance and to start us one time framing down on the daily, and that clearly failed. So long side only, those of you who are in Convergent Trading's head trader channel, I stated that it's just longs only given the way it opened. It pulled back a couple times into the VWAP and into that 63-65 zone for an opportunity to get on the long side. It put in a week high at 69.75. The anticipated result of this, the narrative, is a high probability test of the 7150 area. The 7150 is the prior day's point of control, and it just pushes up through there. It's actually 70 or so. What is that number? No, it's 7150. That's right. 7150. And here it is. It pushes into it, goes to 7350, breaks the IB high, and consolidates and forms a nice little zipper here. This zipper, the expectation is it consolidates within this zipper, and then it starts to break higher since it got above the 65 area, tested the prior day's point of control, consolidated there, high probability play towards a 76 all-time high, and then it consolidates, and then it starts to break, and it breaks right through and puts in a neutral day. This was not expected. And then pulls back to mid VWAP, and then continues. We get the continuation trade, and then we're back in the zone, and it crosses again. Just a mess. Look at this profile. How bulky is this balanced profile here? Then it chops around, and then it finally rises into the close again, finishing neutral positive above the IB. But just we cross the IB high, we cross the IB low, we cross the IB high, we cross the IB low, and then we cross the IB high into the close. This is very uncommon. Normally, generally about, what is it? The stat is now 72%. Historically, it breaks the IB high or the low. It gives us about 27% neutral probability. I haven't looked at those stats recently, but it's 27 to 30% usually. Gives us a neutral day. In other words, it breaks the high and the low. But to break the high and the low, the high and the low, and then the high is very, very low probability. Granted, the IB is only 10 points. It's not as wide as it's been in the past, where it's like 15 points or so. But overall, what we ended up with is a double bottom on the daily, relatively weak low now on the daily, 73.50, 73 at the high, so 2 ticks from the high before it squeezed on the close on an inside day. The green lines here are the prior day's high or low. And so what this is a lot of coiling and a lot of compression, So the expectation is it's likely to, like I talked about yesterday, it's likely to break one way or the other. Of course, the way it was set up yesterday, it looked like it was breaking down or lower, and that did not happen. So, as with the Monty Hall problem, if that didn't happen, then there's a much more decent probability the opposite. And so that brings us into the overnight. Notice that as we sit here sideways on an inside day with a double bottom, yet again, that delta is falling. The aggressors are on the short side or on the protective side, most likely. Here's what happened last night on a shorter time frame. There's a really nice setup here. We open up, we poke higher, on the open, still not taking out the all-time high. We consolidate, and then we finally break higher. But this is where the setup is, this inside out. So we have an impulsive bar here. Then we have an inside out, an inside consolidation, these internal bars that are just compressing and compressing. And there's a fair amount of trading that's going on here. And then at 80 quarter, the trigger price is 80 quarter long, looking for 90 quarter. And then the stop on this is 4 points max, but more likely 2.5 points or so. 80 quarter long, and then boop, it takes it out, and it heads into 90. It takes it a while, but it heads into 90, pushes 92.75 before it pulls back. You could see here that this was a complete reversal at the top. A fair amount of volume went off at the top, but it's a complete reversal at the top. We come back in, and now we're trading inside of the cluster of the overnight point of control, the mid, which is the blue line, the VWAP, the full session VWAP, which is the cyan line, all clustered in here. And what is another relatively, depending on how you like to draw it, relatively large zipper that's giving us a gap. So there's a gap zone underneath here. Wherever we open, there's likely to be a gap zone. There's a fair amount of structure in the last 2 days, but underneath this double bottom at 58.25, there's very little structure down to 38. So what we are setting up here is a nice picture of support and resistance zones that are very, very clear. If I turn on the stock zone levels here, my interaction levels, you could see that it's starting to form these decent structures that are tight beneath us. And so what happens is if we push through these, there's a tendency to see cascading kind of selling action if that happens. I'm not advocating for the short side. I'm always looking for, it's kind of like chess, right? You're making a move now and looking 2 or 3 moves down the line. I'm kind of seeing the structure this way. For today, the fact that we're in new all-time highs on a gap up gives us a very specific and narrow view on what we must do today. One last thing I wanted to cover as part of the review segment here. We've really built, I mean, if we look at what we've got here in terms of profile, we've really built a big P-shaped profile composite, a micro composite on the weekly with a 67.75. So right now, 67.75, 71.50 are key areas, and of course the 76 all-time high just above. But from a volume profiling perspective, 67.75, 71.50, lots and lots of volume there, and lots of clustered around those prices. And you could see the delta is still going negative and is trending down as the market is moving up. So not sure how that's going to resolve itself, but I wanted to just go over this and show you that we are breaking from a nice, again, we've got good structure underneath us now in a short range to 58.25. Okay, just remember that. To 58.25, we've got good structure underneath us, right? We've got a lot of interaction. You can see that the composite has formed a high volume node. There's an MC point of control up here as a result. So these 3 days clustered around the 67.75 area, or let's just call it 68. There's a lot of structure here, but underneath here is thin air to the 38, and then the gap zone down to 1450 from last Thursday. All of that is weak structure below the 58. So the higher time frame, the OTF, is the stops would be below the zipper that's been formed this week at 58. Below 58, I expect selling to accelerate. Please remember that in your travels, in your trading travels. Let's take a look at what's expected for today. Okay, so just to make this obvious, here's what our expectations for today are. Overall, we're opening in a gap zone. There's the high of the prior session is down in here. We are opening in this confluence structure right here. As I said, overnight point. Notice I repeat myself again and again and again. I know it sounds boring to some of you, but I repeat myself because people pick incremental information every time you say it. So I'm not trying to be repetitive, but the goal here is to have you pick up as much as possible in terms of what the story is and what the narrative is. So we're opening right in this cluster right here in the 80 to 83 zone. Remember that trade from last night during the Asian session was at 80 quarter, running for 90 quarter. It went to 92.75. But we're back in that 80 area, so we're back at that kind of SOC area. This is expected to be an open auction out of range. I'm looking for this to be responsive. The overnight inventory is about 93% long. Looking for it to be responsive, not very much. And then I'm looking for it to break to the upside and then start to really grind its way higher. This is in line with the facts. So why am I saying higher as opposed to lower, as opposed to it being responsive? The reason I'm saying that is because we have look at this structure underneath us. You can't just look at the bars. Look at the profiles. Look at how these profiles have moved there, there. There's a lot going on. There's a lot of trading and a fair amount of volume that's encompassed within this area. About 4.5 million contracts sitting down here, probably more like 3.5 million contracts sitting down here with a lot of back and forth, that we broke above. So I'm expecting it to continue to push. And of course, the next target in this dark space above of new all-time highs is a measured move target. We do have the 4100 sitting up here. We do have the 4106 measured move target, and that's where we're likely to be headed. We're not too far from it. Remember, the overnight session missed that by 8.25 points, the 4100 cluster. So that's what I'm expecting. I'm expecting a gap and go type of situation in a bull market that is pushing through and is not finding any sellers. The caveat's still the fact that we keep putting in negative deltas every day. The secondary open auction that pushes out of this consolidation range that we put in overnight squeezes into the 4087 area right in here, which was formed overnight, squeezes into this 87 area. Then we get our impulse down as the longs give up and start to sell and cover back to the open, and then we become responsive down into 76 gets into play. And then we start to work our way through the 7150, and then ultimately the MC point of control at 67.75. That becomes the key target, and that brings us into balance with yesterday's action right in here. 67.75 becomes the target, about 20 points of range. If it's not able to sustain this, then we do have some clear targets below us, key of which is 58 and a quarter double bottom. Okay. So if there's anything you want to take away here, is how the market is testing and failing to continue in one direction. When it fails to continue in one direction, it incentivizes the opposite actor, the opposite side to participate. When the opposite side participates, it pushes in a direction until it's no longer able to push, and it leaves a mark, it leaves a high, it leaves a cluster of volume or something, changes direction. Then the sellers come back in and push it down. Then they get exhausted or they get disinterested. Buyers come in and bring it back up, and so on and so forth. And what's important is to remember the signposts along the way. What signposts did they leave, right? What mark did they leave? Kind of like tracking um, water decay on rock. You can see the lines. This is in the 1870 flood. This is as high as the water got because this is where the erosion in the side of a mountain occurred. Things like that. I mean, silly analogy, but silly example, but this is kind of how I see the market. Where did it go? What marks did it leave behind? And then how can we use that information to make an informed decision as to where we go next, where we're likely to go next? And then the entries are, of course, managed by order flow in the form of many different things, the volume, scope, and so forth. If you want me to show you this, look at this structure here in the overnight session. It pushes on this impulse. It takes an impulse. So impulse, pullback, continuation, fails, and then consolidates on the inside, creating this 80-75 break. And that's the 80-75 break right here. This is as squeeze as these guys who the weak hands that got long end up giving it up right in here, and it ends up consolidating, and then it starts to squeeze the rest of the participants in here into what I expected to be around 90, the anticipated 90. This is the structure, but I'm relying on the order flow to figure out where I play within this big narrative that I just showed you. Good luck. I'll catch you tomorrow. Take care.